So this was January 13th. And we were doing the after news trade. So on the right side is the breakout. The right chart over here is the breakout. So January 13th, it pops up very small. And then it has just a slow, easy winner. That was a very pleasant, easy winner. Okay. Let's look at January 20th. Let's look how bad the loser was. Was it insane or was it just a stop? And I think you know what I mean by was it insane or was it just a stop? Okay, here's the setup. Brackets are going to show up in a second. And now that was a loser that looked like it was a loser because of bad liquidity. If you notice, the move up was all basically a wick. You don't normally get filled on those. And that's what analysis said. Even though the breakout simulator said it was a winner, it wasn't because it was very fast, very low liquidity. That would not be a winner. So you need to be able to tell the difference when that happens. And sometimes, if you're a beginner, you're not going to be able to. You may not be able to tell. Okay. So try to watch what happens here. It whips so fast you can't even see it. The simulator doesn't take into account slippage, bad fills, and it thinks it would have hit the targets. It would not have. So that was a pretty bad loser, but not what I would call insane. It was a fairly normal kind of a loser. Okay. And then let's look at last week to see the quality of the winner. What I'm trying to determine is natural gas's current behavior. Has it passed out of the period of total insanity that we were in from September until right before the holidays? It may have. It looks like it has. I mean, it's totally up to you if you want to make natural gas part of your plan, trading plan. It went through a year and a quarter of pretty good trading, but it's still, you could have $1,000 loser, right? Now, last week was a nice, solid winner. It was a very big move, also. A very big move. There would have been slippage. You wouldn't have made $1,300 on that. Trust me, you would not have. And then I just want to go back a little bit further for a second. Give me a sec, just to still to get a feel for how it's acting. Let me see if we have 1216, which is going back almost 2 months. So I'm just looking for current behavior, right? I'm looking for how it's whether it's trustworthy. So here's 1216. Okay, so here's 1216. Now we traded that live, and because we had a big target, we got stopped. Okay. If we used a 5 or 7 tick target, that would have been a winner. And that's one of the challenges of trading natural gas. Do you want to take a $300 risk just to trade a report with two contracts? The setup that you'd normally use is a bracket of five. The first target is five. The second target, I normally use the third target, 12. And frankly, if you're going to have any chance of making money on natural gas, your outer target, it's got to be bigger than 12 because you've got to catch those good ones that go 30 ticks, 40 ticks, if you're going to have any chance of winning. But I'm just testing the DMM right now. All right. So it's 5 and 12. But if I'm trading natural gas live and I'm willing to use two contracts, first target is five-ish, and I'm looking for 20 on my second in the hopes that, I'm risking 300. Natural gas is a very difficult report to make money regularly. It just is. There's so many difficult decisions. So 1029.59 is the breakout, is the time. And in fact, let me put it on the other chart because I want to go over the 3 minute test, the 3 minute after news. So here's the setup, same exact setup I just did. But I need to get rid of this because it's on my other chart. And I'm just putting the breakout on my right chart. That's all I'm doing. Bracket of five, targets of 5 and 12. Stop is 15. And that's one of the issues. Natural gas has mediocre to bad risk to reward. But I think if you're going to trade it, one of your second, yeah, if you trade one contract with natural gas, it'll never be a winning trade. There's no hope, I don't think, with one contract, because you need to be able to hit that second target so that when you have a loser that's 150 to $300, that at least you have a winner that covers almost all of that, if not all of it. So entry time is 1029.59 and 5 ticks and 12 ticks, which is only a winner of 170. And that's why I think if you trade the DMM, it's not a strong enough setup to make money. And forgive me, I just want to make sure the brackets are good. And then I want to set up the after report. I was thinking about yesterday's oil, and I think it's better and smarter, most probably, to trade the safer secondary trade, which would be the 3 minute. The only difference is sometimes, and if it happens, I'll say it, sometimes I may not always want to wait 3 minutes. Sorry. I'm just testing the brackets and I'll set up the other setup. So just on the right hand side, we're just setting up the breakout 1029.59, and that's what's on the right. Okay. On the other side, so we need a 30-second chart. You have to make sure that your indicator, the squeeze, is set for a momentum length of 17. Okay. And you want your colors so that they look somewhat similar to mine. They don't have to be the same colors, but you want to see a change in momentum on a color change. Okay. 30-second chart. So the rule is, so I'm using the squeeze play. Trade type is squeeze. And here's the setup. So a squeeze play is a type of a range trade. So the first thing you do is ticks above the range, ticks below the range is +1. Now we're going to know the direction we're trading. -1 below. Show the graphics. All right. We're going to show the graphics. And we're using a look back of 2. We're using 2 bars to look back. You don't need time because we're using a range of bars. We're using the look back. We're not using the regular range trade, which uses time. We're using the one click range trade, the squeeze, which is a squeeze play, slightly different, but very similar. After fast. So squeeze play, and then we're just looking for one position and an 8-tick profit. That's it. With a 10-tick stop. Profit of 8, one position, 10-tick stop, squeeze play. Okay. When you enable a squeeze play, you get the buttons. So what are the rules of this trade? We wait 3 minutes. So we're going to use our breakout on this side. Okay. We're going to watch the breakout on the right first. And we'll see what the news is. See whether it misses. They're expecting a drawdown of 222 billion. It's a lot, but it's less than last week. After we get a trend, for instance, if we were at the time of the trade and the squeeze looked like this, if it looked like that, then if it was just like this, we would be waiting for a dark red signal. Okay. Right now, as long as it's underneath, we'd be looking for the squeeze to change direction and turn dark red to print 2 of those. And for the moving averages, these 4 moving averages, we'd like them to be on our side, at least starting to point in the direction of the trade we're going to take. So we're going to know if natural gas shoots down like this, then this would have been our potential entry to the other side. That's the setup we're looking for. It's so nice when it's that clean. And we want the moving averages at the time to be pointing up. 30-second chart, the squeeze, those moving averages. Black is 100 EMA, gold is 47, they're all EMAs. Red is 21, and the blue is 8. Those are the EMAs we're looking at. And then we're going to know the direction we're going in, we're going to click the one click range long if we know we're going long, and we're going to click the one click range short if we're going short. We don't need the button on the far left, which puts orders on both sides of the markets, because we're not trading both sides. And we're not using the two buttons to the right because they immediately put you in the market, long or short. Momentum length on the squeeze is 17. That's the only thing we change, TJ. Other than, you have to have your colors set so that they create easy to read momentum. You can use any colors you want, doesn't matter. So the rule is, though, we're not even going to look at this for 3 minutes. I mean, we're going to look at it, but you're not supposed to take a signal for 3 minutes. Sometimes with natural gas, you might have a reason to get in quicker because I have a slightly different setup, but we'll stay with our 3 minute setup today. So TJ, just momentum length on the squeeze. That's the only item we change. Momentum length is 17 for a 30-second chart. That's important too. Okay. So we have about a minute, not quite a minute and a half. Let's check our time sync by going to the website time.is. So natural gas is pretty volatile. Today, we've got a minute. I like I like it in ticks, not in points. So it's down 100 ticks. That's a lot. So that could make a build harder to work, right? Is it going to go down more than 100? It could, but it could make the trade harder, the breakout trade harder. So here comes the breakout. So just watching, that was a tricky entry. And the news is down I'm sorry, 84. Nope, 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 nope. Hold on. Minus 222, matching news. Matching. So that would have been a problem, okay? A possible problem for a live trade. TJ, did you trade that live? Tell us what happened if you did. Tell us what happened if you traded that live. Now, that was not a good looking entry if that's what happened live. So remember, $300 negative at the moment. So that was not a good trade at all. And that's why we're avoiding natural gas breakouts. Yes, they work. And look, you might have made 800 last week. But that's why if you trade just one contract, it's very hard. And if you trade two, look, and everybody could have different results because of different targets. If you have smaller targets, You might have a better chance to make money, although I don't see how you could have made money on that trade. It never got into, I'd have to look at the video. It didn't look like it ever went into profit for my chart. But I believe you. I believe you, AJ. And Lorenzo shows what the other issue with gas is, 4 extra ticks above and beyond the stop. It often. Now, see, here's the issue. I might have wanted to enter that. We're too late, in my opinion. We are too late. I'm going to follow the rules, but the trade, in my opinion, is over. This was the entry, and it was before 3 minutes. It was before 3 minutes. That's what, that's what, that's what I think, especially now with that big of a momentum difference also. So now the rule is though, you have to wait for a long trade. We can't take a short. You're not supposed to take a short. So you could wait 5, 8 minutes now. The first trade was not within the 3 minutes. Okay. It was not within the 3 minutes. So there's no signal yet. We did not have a signal yet. So I'm waiting. Now, it was matching news. So one of the issues you're dealing with is you have a very large natural gas trend to the downside. No news is not helping you find a direction. I'm not sure I want to go long against this huge negative trend on the day. Okay. My advice would be not to trade it long today. The pop up was long, right? We missed the trade, in my opinion, because it should have been taken immediately. But it was, I think that you have to break that 3 minute rule if you get a perfect signal. That was a perfect signal. I'm going to say that this trade is over unless you're going to try to find a continuation trade. And we could stay here for a few minutes and test the setup if we get a long signal. Okay, so if we get a long signal and it prints twice, two light colored red momentum bars on the squeeze, and the moving averages are not heavily pointing down, that would be your entry signal. Okay. So right now, there's no signal. But if I was going to run a replay on this, there's no doubt in my mind that I missed the trade. The best signal already took place. However, no, and if you think about it, it gave us 2 bars. There were 2 bars. One was so small that you sort of can't see it, but it was correct. So now, look, maybe this will still work because these indexes, gas, oil, they're volatile. They go up and down a lot. We don't have a signal yet. There's the first signal, right? It's pointing up. We're supposed to wait for 2 bars, and then you can click the 1 click range long. You're fighting a big natural gas trend down. I'm not sure I would do it with real money, but we just want to see what the setup does for people that like risk. We should get a candle. Oh, look, invalidated the trade. Invalid. Okay. Wrong color. Wrong color. So not the right color. The moving averages, the 8 is working. So too bad that that wasn't a light color. There's another light color, but we really need 2 as the rule. 2 is the rule. I guess you can break the rule, right? But I'm not going to break it today. I already missed the trade. I really believe that. It was missed. And it was at 2 minutes and 30 seconds. Here comes another signal, maybe. It's a long. And now let's see if it can push up. All we want is 8 ticks. Bingo. Gave us the 8 ticks. So it worked last week and it worked this week. You're risking 100 to make 8. Okay. Risking 100 to make 8. So even with a tough, a tough trend to the downside, it still worked. Okay. It's an interesting setup. It's really an interesting setup. Now you really had 2 setups that worked. I can show you how I believe. Well, look, I don't have to download it and show you. You can see it. It's so obvious. When you got this signal on this candle right here, the only problem was it was 2 minutes and 30 seconds instead of 3 minutes. That should have been taken. It should have been taken. Okay. So that's the lesson for today.